Hi and welcome to the Market Alert for Monday, the 6th of December already. Wow. So let's go back to Friday. We saw a bubble market bloodbath as Powell put strike plunges. He's pulling the rug from under the market at the moment, but that will soon change, as you'll see in just a moment. Just one wafer thin mint. And then here we go. Market begins pricing in rate cut as yield curve inverts. We are now where we were in late 2018, just weeks before stocks tumbled 20% and Powell capitulated, sparking a massive rally as the Fed's last brief tightening cycle came to an abrupt close. And that's only 4 years ago this January as we roll over into 2022. It was fascinating, and the market did just plunge. And it didn't take long for Powell to then stop tapering, and they went back to printing. And that's likely going to be the case once more as we get into January. Daily briefing: fear is back. Omicron's grip threatens global disruption. The Nasdaq is down over 300 points. That's on Friday. And the VIX continues to edge up to its 52-week high. Jim Bianco discusses the latest. Well, we don't need to read about Jim. So that's just to say the headlines. And the fix is in. You can't beat the international mafia fund, can you? The IMF warns it will downgrade global growth due to Omicron. We are likely to see some downgrades of our October projections for global growth. You get a few cases around the world, and now they're going to use this as the excuse to downgrade. And that's what this is all engineered and designed for in the first place. Unbelievable. Absolutely unbelievable. Meanwhile, in the implied volatility land, Friday we're at 23.51, just slightly lower than the week's high. Nonetheless, we're coming off the low here of 12.37, so we're looking towards a 100% increase, which would lend some support to the market to move back to the upside as well. Plus, we've got only a few weeks of the Santa rally and Christmas bonuses for the bankers as well. Today we've just got MPC Broadbent speaking. That's at 11:30. So a quiet week this week. If we just have a look, quick look through. There's nothing major out this week. Tomorrow, nothing there. Italy's even on holds on Wednesday. There's a few bits and pieces on Wednesday. And then Thursday again, but nothing major until we get to Friday. Actually, we have a major one Friday. They're always Fridays, aren't they? We've got the CPI, which is forecast to be slightly lower, which will be again an excuse for them to use the paper derivatives to smash the metals market should the level be low. And I mean, I would imagine that it's going to be, but you just never know. Last time it was forecast to be lower and it came out higher at the figures you can see there. So we'll just have to wait and see. Right, let's have a look at the Dow. I'll find it in a minute. There we go. So this is where we are. Friday we had a bit of another down day. We're still at 89%. Markets are back through 38 and making its way at the moment to the upside to 50%, 34,950. No major news today. Should be free to move towards the upside there. In the 30-minute, you can see at overnight prices have consolidated and are sideways, sitting on Friday's high at the moment. In the German DAX, similar picture there. Bigger move to the downside for the DAX during Friday, stopping at 62.78 and up on the overnight as well. The moment is closing or trading, I should say, above the 5-bar moving average. Upside targets are here. That's the first set. But there is another set in between where you've got these automatic lines showing the high and low. You could actually use this in order to draw in from there down to there and a set of fibs there. So let me just remove this just to clean it up a bit and remove the 38 there and that one there. So you can see short term, these are the numbers that you'll be looking for to get back to here. And if the 89 is taken out, then we'll go back to this high to this low. But that's the short term of the daily, as it were, where the market is likely to find some resistance. And also at the 89, you've got the 200 MA in there as well. So another interesting area to keep an eye on as well. In the 30-minute chart for the DAX, you can see again Friday we moved sharply to the downside. This happened in the morning. The market then finding support, as you can see with the demand, as the market stopped and then reversed, and then it's been moving up overnight. It's above the DP at the moment, but close to, as you can see there, Friday's DP level as well. So fairly quiet at the moment, which I'm surprised by. I thought we'd have had a bit more action, but say there's not a lot this week apart from the CPI numbers on Friday. In the 5-minute chart, we started off with the session here where the market was oversold. I've also got divergence in the stochastics now. I'm just testing this at the moment, but that's what it looks like, just to let you know. So you've got red, 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 parabolic red. We attempt to come back there at Thursday's high. Market remains red and then continues lower before we get profit taking and then a resumption to the downside with further divergence before the market moves back to the upside there. And a similar picture in the 2-minute chart as well. You can see the market kicking off there. We were originally green, and then we turned to red, and then the market just moving down, finding a bit of support at the 200 MA there, trying desperately to get back above it, but failing, and then moving down until we see the market moving back, failing to close above the 200 MA. We've got supply coming into the market, and then prices once more moving to the downside there. That was in the morning, and then mid-morning the market makes its way back, and then in the afternoon follows the Dow to the downside there. Again, you can see it's red all the way through all the 3 averages as well. Market closing straight through the 3 averages, and it was also showing divergence as well in the stochastics, which you can see there, but it's now automatically shown. It's still in testing at the moment. It's not available until probably January, but there you can see at the moment it automatically highlights where you've got to the resistance, and then when you combine all of the bits and pieces together, not resistance, sorry, divergence, and then you can see once it combines all of the bits and pieces how it automatically identifies potential trades. But overnight the market moving to the upside, as you can see there, and then stuck in a sideways range. We know it's stuck because we can see all of the demand and all of the supply on the upside as the market maintains that sideways range, and how you get these points at the sideways range where you've got the support and of course then the resistance on the upside. Quick look at the metals. Let's just find these. We'll start off with silver. Friday, the market managing to come back. We have got some divergence in the stochastic at the moment. We're oversold as well. Got a bit of demand, and whether the market will hold, let's just see. Well, I mean, we got the low there. So again, 89% is going to be around this sort of area should the market pull back. The dollar's up overnight, which you can see there, just starting to tick to the upside. 89 is going to be an issue for this market, as is Friday's high, which look here you can see in a bit more detail, as the market is attempting to move to the upside at the moment. Gold also looking very much, no it won't because that is silver, I'm going to say, showing a bit more promise to the upside there, coming off the 89% retracement, with the stochastics also oversold and showing divergence as well, meaning they're starting to move higher as the market made a new low. So the momentum is slightly shifting there. Doesn't mean to say it will, but it's always interesting to see or be aware that there is a potential switch in momentum. So silver opening at Friday's high, just to finish off, Friday's high at the 200 MA there, and starting to drift to the downside as well, but oversold, as you can see there. Okay, that will do it for this one. Nothing else to report. We're still around the 79 level, 80 level for the gold silver ratio. But like I say, that's just a quick roundup of where we are, see what the market does today. We're a fairly quiet week ahead of us, to be honest, with the CPI numbers out on Friday. Okay, that's it for this one. As ever, thanks for watching. See you in the next one.